CNBC TV18 and CNBC Awaaz present The REIT Connect in partnership with IRA.
Welcome back to the show. Let's focus on REIT Connect, a special segment dedicated to understanding the real estate investment trusts. Now, we have today with us Alok Agarwal, who's the CEO of Brookfield India REIT. Now, Alok, so good to have you in CNBC TV18. Now, the one question that everybody is asking is, post-COVID, as people are working in a hybrid situation, the office demand, how is that panning out? And in terms of the matrices, has it reached the pre-COVID levels?
Thank you, Nisha. Thank you for having me here. So if you really see, commercial real estate is doing pretty well right now. It has really kind of gained momentum in last 15 to 18 months.
Right.
And there are a number of factors determining this growth.
Yes.
Let me just sum them up.
Yes.
The first factor is advent of GCCs, or
Yes.
growth of GCCs. And
Yes.
GCCs are global capability centers.
Yes.
And we have 1,600 of them in India. And every year we're expecting 100 more to open their offices for the next 5 to 6 years.
Right.
And the best part is they are not here just for the cost arbitrage.
Yes.
They're here for talent.
That's
so
right.
That's going to lead a lot
That
of demand.
change has recently happened
Yes,
in GCCs with
absolutely.
the global MNCs looking at India in a more protracted manner. Yes.
Absolutely. So that's one. Second thing is Indian economy is doing pretty well.
Yes.
About 7 to 8% growth year on year. And
Yes.
you all know that India is a service-driven economy. So that's also going to lead to a lot of demand in office spaces.
Right.
And when you talked about pre-COVID and post-COVID,
Yes.
see 2019 and now,
Yes.
most of the IT companies, tech companies, their manpower has gone up by 20 to 80% depending on which company we're talking about.
Right.
And their real estate portfolios have either remained static or really have not gone up. So as companies, as employees keep coming back to offices, you see a lot of demand for office
Right.
going forward also, and still there. It's
Right.
gaining momentum. And last but not the least, the SCG reforms has been a game changer,
Yes.
both for developers
Yes.
as well as for occupiers. This means the companies which were not eligible to in SEZs,
Yes.
they can take space in SEZs
Yes.
in grade A kind of offerings,
Right.
campus developments. So a lot
Right.
of demand for commercial real estate sector now.
All right. So demand you're saying, but is there an impact of the kind of layoffs that IT startup world has seen and the hybrid situation? And tell us about the matrices, absorption rate. How is that now and what is the projection for that?
See, if you really see, IT companies have been reporting flat headcount numbers for last 1 year. But I would say don't look at last 1 year, look at 2019, where
Right.
the growth is almost 20% depending on which company we're talking about. And you would be surprised to know that last year we had 70 million square feet of a gross leasing,
Right.
about 40 plus million square feet of net leasing, which is highest in a year,
Yes.
more than what we had in COVID.
Yes.
And this year also we are expecting same numbers, 70 million square feet of a gross leasing and 40 plus million square feet of net leasing. So that's what we're talking about. As of today, we have 45 million square feet of a leasing inquiries in the market.
Right.
I'm not saying all of them get to convert it, but that's a number. And rentals are doing better.
Yes.
They have gained momentum, especially in core markets, they have increased.
Yes.
Because most of the supply is coming in peripheries, not in core markets.
Yes.
And even the peripheries are doing good. I would
All
say
right.
that.
So from absorption, demand and
Yes.
pricing front, it is looking positive.
Very positive.
All right. Now, it's been a few years, and remember that REIT listings is a very recent phenomenon. It's been only a few years that all the REITs have been listed. Now, how is the traction amongst the retail investors as well as the mutual funds?
Also, valid point. First REIT got listed about 5 years back, and it's not a long time. And when the first REIT listing happened, the minimum amount for the retail investor was 2 lakh rupees. Then it decreased to 50,000. Today they can buy 1 unit.
Yes.
So that has led to increase in number of retail investors who have
Right.
invested in REITs.
Right.
And also the great part is that this is a product where they get an annual yield. Large part of that is tax free.
Yes.
And there's also growth.
Right.
So there, maybe low teen to mid teen returns they can get.
Right.
And it's liquid, it's transparent.
Yes.
It provides them an opportunity to invest in commercial real estate sector of India.
Yes.
Mutual funds also are gaining momentum, and we are expecting further leg up because right now in India, REITs are classified as hybrid. We are hoping that they would be kind of given a state of equity that would lead to increase in demand from mutual funds
Yes.
and passive flows from ETFs
Yes.
as well as index mutual funds
Yes.
can come in,
Right.
leading to growth of REITs in as well as more liquidity.
All right. So IRA, which is the REIT association that has been formed, it's lobbying hard for an equity classification of this particular asset class, and therefore more mutual fund traction can be seen. And when it comes to the retail investors, a small ticket size in terms of the property investment being liquid, tax benefit, as well as on the other hand, the assured cash flow every 3 months. So that is what we are looking at. And of course,
Absolutely.
the annuity-based and the foreign investors focused on infrastructure real estate in the world are already your sponsors.
Oh, absolutely, absolutely.
So they
absolutely.
see value in this particular
Yes.
product. All right, so when we focus on the growth potential, now Alok, this particular sector is also expanding. Commercial real estate is also taking different forms. What is the kind of growth potential that we see in this particular space?
So I would say immense growth. If you really compare from US, in US, the market cap of REITs is about 1.4 trillion. In India, it's about 12 billion, not even 1%. US has about 225 REITs. India has 4. So just look at how far and how far we can go. So that's one. Then if you really look at REITs, we have 3 office REITs. We have 1 retail REIT.
Yes.
Now we can have REITs in hospitality, we can have REITs in data centers, we can have REITs in hospitals, we can have multi-asset REITs, we can have residential REITs. So REITs, there's a scope for REITs to grow in size,
Yes.
in scale, and multiple sectors.
Right.
So that's where's the opportunity. And if you really see, REITs have a low correlation with other asset classes. So they provide a good diversification bet. And I think it's important that everybody should have REITs in their portfolio as a diversification bet.
All right, so diversifying the portfolio and having this kind of a property investment avenue.
Absolutely.
But Alok, when we look at the overall REIT and of course, from some categories of commercial real estate, you're saying it's going to expand to many more. And we do gather that data centers as well as logistics, warehouse, all of them are really coming into the picture, the sectors which are the sectors of the future and growing. Now, when we talk about the challenges, what are the challenges that REIT sector is facing and could get simplified in the due course of time for the investors to take a bet on this space?
So, I mean, really, one thing is that there are new product 5 years back. So, investors are not so much aware about them. So, individual REITs as well as IRA, we have worked hard. We have worked hard conducting panel discussions, reaching out to investors. So that is something we are creating awareness and making the product more popular. So that's one thing. Other thing is globally REITs are classified, as I said, equity, and we are hoping to get same status in India as well. And once that happens, we can get more inflows. That's one. And also if that happens, the holding period for long-term capital gains that can come down. That's going to make REITs more attractive.
All right, attraction, but very quickly, if I have to say one thing which really differentiates a REIT asset class from pure play stock investment in a real estate firm, how will you differentiate very quickly?
I would say consistent, regular cash flows and growth all together.
Right. And with so many global investors coming, probably a lot of thrust is given on the corporate governance standards of REITs as well. Alok Agarwal, always a pleasure speaking to you and gaining more education on how REITs as a product is really panning out. So that was all about REITs on REIT Connect. With that, it's a wrap on this segment.
CNBC TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.